Back on Morning Movers, Broadcom shares moving higher this morning, up 5% after the company announced plans to buy back $10 billion in stock through December 31st. Chip stock up 15% over the past 12 months, but down nearly 40% from its all-time high. To put that in perspective, that was in mid-December. All right, time now for Options Corner. Joining us for a deeper look at the chart for Broadcom, we've got Rick Ducat, Duke of Data, lead market technician here on Schwab Network. All right, Rick, so talk to us about the trends that you're paying attention to when it comes to the chart for Broadcom.
Yeah, so I mean, just taking a look at Broadcom versus kind of the general market here, we can see if we take our yearly percent comparison, a change chart here, Broadcom is actually holding up a little bit better than the broader market and also outperforming its own sector, which is doing rather worse than the S&P 500 there, you can see. So really, Broadcom has been holding up better than perhaps many other parts of the market during this rather difficult few days that we've seen here. Nevertheless, if we were to look at our next chart showing a 1 year, 1 day with our moving averages here, you can see that we've trailed off significantly from those highs near 252 or so. We've also given up all three of our moving averages that we follow recently: yellow 21 day, orange 63 day, purple 252 day exponential moving averages. They're all starting to trend down as well here. So starting to deteriorate. The trend seems to be progressing more to the downside in this case. We are near an important potential support point, though. Take a look at that green line there. That's our low point from back in September, near about 135 or so. We didn't quite get there yet, so that's a more positive situation there so far for the bulls. We haven't quite cracked that level here, and it's looking like we could be in for a nice bounce today. So maybe even if the move is strong, we could break above that downward sloping trend line on the RSI there in red, taking us perhaps and setting the stage for a new upward trend here in this name, Diane.
All right, and Rick, any notable options activity in Broadcom yesterday that you noticed?
No, we didn't do a look at the options activity today, but what we did look here is at a longer-term 5-year chart for in light of kind of the crazy markets that we've been seeing recently. So if we could progress to our fourth and final chart here, you can see that this is 5-year, 1 week. We've slipped below that weekly linear regression line, our line of best fit, that blue line. We've also broken that long-term trend line as well here. So we're coming up to a volume node area, an area of heavy trading. Look for potential support near like 130 based on this metric, Diane.
All right, that's Rick Ducat, lead market technician with the chart for Broadcom. Time now to go through an example trade. For that, we've got Tom White, senior options contributor, co-host of Fast Market. All right, Tom, so how would you proceed with an example trade for Broadcom in the context of this buyback news?
Well, this comes, the rally today comes after a 5.3% move to the upside yesterday. So starting to see some, at least some stabilization on the downturn. Now, the stock's still off over 30% from its all-time highs that we saw at the end of December. So we still are in bear market territory for the stock. Now, near-term option implied volatility really elevated right now due to the fact that we've seen the pullback in the overall market, and especially the chip name. So I looked at a strategy that's going to take advantage of maybe a move higher and taking advantage of that higher implied volatility in the near-term options as opposed to what you're buying in the longer-term options. Now, we don't have earnings for a couple more months. They just reported a few weeks ago. Really good report. Raised guidance, too. So I went out to the May monthly cycle, so about 38 days to expiration. I'm going to buy something at the money. Stock's going to open up about 163 today. So I looked at buying the May 16th monthly options on the 165 strike, and then against it, because I want to take advantage of that higher implied volatility in the near term, sell the April 17th monthly options that expire in just 9 days, sell the 185 strike call. So I'm creating a bullish $20 wide call diagonal to the upside. Now, I'm going to pay about a debit of about $12 for that if we open up here around 163. That means I'm paying less than the width of the strikes in the call diagonal, $12 versus a $20 wide call diagonal. If I pay that $12 debit, anything above about 170 is going to be potential profitability. on this type of strategy. I'm risking $1,200. And you can see the apex of profitability is going to be at or near that 185 strike. Now, why is this call diagonal price less than the width of the call diagonal of $20? Is because implied volatility levels. I'm buying about a 70% implied volatility on aggregate on that 165 strike in the May 16th monthly options, selling over 100% implied volatility in the near-term April 17th options on that 185 strike. So that dispersion in implied volatility levels is giving me a lower price entry point, lower risk for this type of strategy. Now, it's a month-wide call diagonal, so that gives me the opportunity to roll multiple times, up to 4 times, that short option as we get closer to expiration. Now, time decay is in your favor, or theta, where the price of that short option that you sold in this strategy decays at a faster pace than what you bought in the May. So that'll increase potential profitability on any rolls or adjustments of that and reduce risk every time you do that. But this might be the way to take advantage of that dispersion and implied volatility while still taking a directional bias on a name like AVGO if you think it's going to continue to rally to the upside.
All right, directional bias there. Bullish call diagonal example trade for Broadcom. Thank you, Tom.